Alright, my friends, today is April the 28th. It's about 30 minutes after the weekly open. Let's do the market outlook and plans for the week ahead. So let's go ahead and start off with the news events. On Wednesday, we have the FOMC. You guys already know the drill that I don't really care about trying to be a predictor and really trying to guess what's going to happen on these days. Frankly, I don't really care that much. The only reason why I make a note of them is just because there's, it's safe to expect some extra volatility around that news event, which is lovely considering the fact that I'm planning on getting back into scalping officially this week. So any days that have a little bit of extra juice, I'm going to be, focused up on for sure.
If you're interested in gaining access to the spaghetti template and learning how to properly utilize it, you should consider joining the Paragon group.
Let's go ahead and get into the macro outlook. So it's going to be a bit boring on the macro today just because nothing's changed. As far as I'm concerned, I still think that, the main things that we're dealing with are, one, expecting a boring summertime, just chopping people up. As I've said in the most recent outlooks and streams, I think that major news sell-off that we got a couple weeks ago is basically going to be the peak of volatility for the summertime. So you can basically expect the next several months to be kind of boring. Looking at things glass half full, that's just an opportunity for you to get a mental reset, opportunity for you to get organized and do research and whatnot for later in the year. So definitely don't look at it glass half empty. So as far as I'm concerned, that really is the main thing to be doing this summer. So from a technical standpoint, we're pinned between 60K and previous all-time high 69K roughly. We'll examine the range in more detail when we get to medium time frame, but that's what I'm working with. Acceptance below 60K would mean big trouble and that we would end up trading down a lot lower. To be clear, because I saw some Twitter takes that were questionable on this, so I figured I would explain this a little bit. Just because we were to, do a theoretical move where we sell below 60K doesn't really mean that the trend is over. It's more about acceptance below. So realistically, how I see this next local bottom playing out is probably us trading down and driving a little bit and then rounding out and then reclaiming 60K and then coming back up into the midpoint of the range. As it stands now, things look a little bit rough on lower time frame, but we'll address that here in a moment. So TLDR across the board is, as far as I'm concerned, on macro, right? The trend is still very much up. There's obvious signs of momentum loss, but that's more or less what we expected. If we accept below 60K, then that would be very worrisome. Over the next week or two, I'm going to be looking for an opportunity to hedge on futures so that I can just feel comfortable with how things end up playing out. Because my overall thesis is that we're going to be boring in Q2, probably boring in the first part of Q3. As we progress through Q3 this year, we'll probably see a spike in momentum and see the actual range break start, and then Q4 will be really hot, in my opinion, from a volatility standpoint, whether that's up or down. My opinion is still that we'll break upwards, but, I don't have a crystal ball, and that's pretty, a little bit too far out to be accurate at all. So that's pretty much it, right? Brace for summertime chop. Get ready to work on organization and building up skills and doing research on what the next hot plays are going to be in Q4 this year. Let's go ahead and get into the medium time frame. As far as the medium time frame is concerned, give this a second to load up, but more or less where we're at is just expecting more chop. So I was hoping the volume profile would load a little bit differently, but there it goes. So the key thing right now is this is our range that we've been building out. We're calling it, it's sunken down, so definitely value shifted down a little bit over the last week or two. Value area low, 62.8 roughly. Value area high, 70K even roughly. We expect to, continue to be pinned within these two regions for the time being. How I'm looking at this right now is the midpoint around 66K, 66.5 roughly. Really strong resistance right now. So what I'm kind of expecting this week is that or at least what I'm hoping for is that we'll trade up, because right now this looks really sluggish and looks like we're going to want to, trade down again. So what I'm hoping for is us trading up towards mid-range, trading towards 65, 66K-ish. That's where I'm going to probably be looking for an opportunity to hedge out on futures if I get this. Because I think that the way it looks right now is that the best case scenario is a pop for us to short into or to hedge into, because I think that as it stands, we're probably going to end up trading down. if for some reason bulls are able to get through this area and kind of reclaim the midpoint, then the obvious target's, you know, coming back up towards supply at the range high around 70K. I don't really consider that to be super likely. There's no real reason for that to happen, especially given the time of the year. So the most optimistic outlook for bulls is really just a pop. I don't really see anything happening anytime soon for them. I think that bulls need to wait till July or August before the trend is going to really start to even begin resuming. So that's pretty much it for medium time frame, right? We have the range marked out very clearly. We know the major resistance right now is going to be really rough to get through, so we kind of expect another stab at the lows most likely. I wouldn't have any interest in really shorting this. It's just not something that I really care to participate in. I'm not saying that it won't go down, and I kind of think it will, but I'd rather just go delta neutral and not really try to be directionally shorting this all that much. Let's get into Sol. The truth is that a lot of these tokens are looking really rough right now. From a momentum standpoint, they're just all pretty down bad. So really the best ones are just the ones that haven't broken their trend structuring, which is kind of few and far between if we're being honest, but we'll go ahead and run through some of them. So still like Solana, the trend is still okay. I mean, honestly, the trend is still not bad. This has been a pretty painful experience, you know, eating this kind of drawdown recently, but it is what it is. The trend is still good. And Solana has worked out really well for me this cycle, so I'm going to just continue to kind of have blind faith in Solana continuing to work out. Doge still looks really good from a high time frame standpoint, but it's been really chopping the fuck out of bulls recently, which is okay. So again, I still have a lot of conviction that Doge is going to end up working out for me. You just got to be really patient and just chill. That's pretty much it for the week, guys. And don't fall asleep at the wheel. This is the time when everybody is going to get really bored. They're going to get focused on other things. You know, it's kind of like the meme of, you know, if you're in crypto, pivot to AI, which was at the, you know, absolute bottom. Don't be that guy, right? If you're here, stick with it. I really think that later into Q3 and into Q4, we're going to have a really wild time this year. So good luck out there and cheers, everybody.